All right, this is this week's as well. We had a nice sell at 67. I don't remember what day this was this week. Okay. Okay. And then we had our target at 62, a 5-point trade within a couple hours. Okay. Now capital. Again, we talked about this when we talked about how much you're going to need to trade. Now again, we always know that there are expenses with each trade. Broker is going to charge a commission. Okay. You might use E-Trade to trade stocks. They're going to charge, $6.99, $7.99, whatever they're saying with the baby on commercial. It's funny though. I enjoy them. But we know that it's different when it comes to options. Okay. And every broker is different, so I don't want to put a number out there. But the amount of money that we're looking to pay a broker is $5 round trip. So $250 in, $250 out to trade futures. So if I were going to make a point with one contract, I make $50, but it cost me $5, so I really made $45. So we just have to know that there is that part of it, that we do have to pay commission. All right. Now, what's fun with futures are these costs are negotiable. The more you trade, right, and they see that you're an active trader. Now, it doesn't mean you have to make 1,000 trades a day. A couple a week even shows that you're an active trader. These are negotiable. You call up your broker and you say, hey, listen, I don't want to pay $5 anymore. I want to pay $4.75 or throw a number out there. And they'll say, okay. Now, again, that might not seem like much 25 cents a trade you're saving, but if you're, depending on how much you're trading, how many contracts you're trading, that could be a good amount of savings each year. But I just want to let you know that these costs are negotiable. If you don't ask your broker is going to try to make as much money off of you as possible. Okay? They will charge you, $7, $9, assuming you don't know any better. They're assuming like, hey, you want to try out futures. Okay. Try them out. And they'll charge you $7 thinking that you don't know any better. So you say, listen, no, I know that I shouldn't be paying that. And they'll say, oh, yeah, it just defaults to that, and they'll make up some excuse why they were charging you $7. It was a mistake. Yeah, but it's never a mistake. Okay? Now in a broker, again, I don't care what broker you use to trade futures. Again, a lot of you who trade stock and options, you use the same broker if they allowed you to trade futures, if it's worthwhile, if they do futures trading. Okay? You want an easy-to-use platform. What that means, especially if you're going to be trading with us, right, there's strategies that we use, a handful of strategies, and we're going to talk about that here in a minute, how we make money day in and day out in the market. But it's new to you. Futures are new to you. You want to be able to paper trade, right? You want to be able to simulate the trade with fake money, not having to put real money at play. So you want to find an easy-to-use platform that'll allow you to do that. And there are plenty of them out there. Again, capital requirements and margin, this depends on you. If you only want to put in $5,000 to trade futures, you can, right? But your broker, then you're looking at a specific list of brokers, where if you say, hey, listen, I don't mind having $50,000 in an account, then your list just got larger of brokers that you can use. Okay? Good technical support, again, when we talk about what I use, we're trading off a chart. Okay? I use a trade matrix. You guys probably all know what that looks like. Trading options, you see your option chain. It's just different with futures because all I see is a price. I don't need to see different strike prices, just a price. But I need good technical support in case, it's a new platform I'm getting used to if it is new, and I want to know that I'm going to have someone there to talk me through it. I'm not very technical. I'm more technical than Frank is, but there's nothing special about this presentation. The background is just white because I don't know how to do all that fancy animation and stuff. So I'm not very technical. I know how to put together a slide point, though. Okay, so good customer support. Let me tell you why this is important. If anybody else has had this experience, then you're with me. This has happened a couple times. No matter how great your internet connection is, at home, I'm hardwired in. I have Comcast. It's fantastic, super fast. But there's been a couple times where I've gotten into a trade, and before I could put in my stop loss and my target, my internet's gone down. So now I'm flying blind. I'm in a trade in which I have no idea where the price is at, nor do I have my exit strategies in. I want to know I'm going to make a phone call, and someone's going to answer. I have been with brokers where when this has happened, I've called them up, and I get You have reached so-and-so. Please leave a message and we'll get back to you as soon as possible. I'm in a trade right now, and I don't want you to get back to me as soon as possible. I want you to get back to me right now. And so that's important in a broker. And I'm hoping by now you guys have good brokers, know good brokers in which that doesn't happen. But let me tell you, that one, that good customer support, that was with a big brokerage firm that happened. So that's important to not ever have that happen. Quick fills on trades and best entry. Because of technology, most brokers will guarantee that nowadays. Because everything is so fast, they're wired in, technology is fantastic, and they'll guarantee you quick trades. If your trade doesn't, especially if it's a market trade, and you can snap your fingers and it's not executed, then you need a new broker or a new internet connection, depending on what you're using there. But fair commissions when contract rate, we talked $5 round trip. I'm a little fuzzy, I apologize. Good charting is a major plus. Again, with what I teach, we don't need fantastic charting. Any charting out there, basic charting, is good enough. And we're going to go over why in a second. But that should be part of your platform. If you use eSignal, if you pay for charting, fantastic. They're great. eSignal's amazing. And there's other charting that's out, but you don't need to. You don't need to pay for charting. If you do, then you do, and then you have that benefit of that. Okay? Technology, real quick, easy. You need a computer, a reliable and relatively fast internet connection. That means anything but dial-up and the HughesNet stuff, the satellite. Anything else is good. When I'm on vacation, I trade with the broadband card. I'm with Verizon. I just use broadband card. That works perfectly fine. Okay. And then charting again, if whether it's with the platform that you get for free with your broker, or if you pay for it, that's whatever suits your fancy. Okay. So why pivotal directions? Okay. We're teachers. Again, I'm a successful trader. Frank's a successful trader. We want to teach those things to you. We have many members that take advantage of this every day that we've taught. Okay. We've been in business for probably about 2 years as teachers. We've graduated some students in which they don't need us anymore to help them. 3 what? 3 years? I'm getting old. Okay. So we're teachers. All right. Our strategies are proven, and I'm going to teach them to you exactly how we use them. The strategies that we use are 80 to 90% successful. There are a lot of strategies out there. I've used a lot of them in my years of trading, and I know which ones work and I know which ones don't, and we're going to talk about why certain ones do and certain ones don't in a minute. Okay? We hold your hand every step of the way. Okay, I'm not going to just, sell you a book and say, here you go, have fun. Okay, I do a daily chat room. We're going to talk about this. I do everything that I can to make sure that you are a successful trader. Okay, not only that, we're going to direct you. Again, we have a daily chat room. We're going to talk about that in a minute, in which not only are we teaching you our strategies, but we'll say, hey, according to this, we're going short here at this number X. So you might be thinking to yourself, hey, according to the strategy, I'm supposed to go short. But when you get that reaffirmation, that's your daughter. It's on vibrate. I can't do it. Doesn't go to silent for some reason. I don't know how to work the phone. It's new. Okay. So we direct you. So we'll just reinforce the fact that, hey, this is a short area. I thought I took this off. This is a picture of where I went to university, Michigan State, and I'm a finance major. I was a finance major. I learned nothing about trading futures in school. I don't want you to think that this is college education. I get worked up a little bit when I talk about school because it was a waste of $100,000. But depending on what you learn, but finance, I learned nothing about finance, unfortunately. If anybody here is from Michigan State, I apologize. I give money to the university, which probably goes to the football program, but great for my social life. Oh yeah. Okay. This we're going to talk about here, institutions. Anybody who trades anything should be aware of institutions. This is probably the biggest thing that I could ever teach, and I did a little video on it, and we're going to get into it a little bit more in depth here today. Institutions drive the market. Period. Futures, stocks, options, Institutions drive the market. Okay? If you don't understand that, understand that. Institutions drive the market. They have the money. They drive the market. Your 100 shares that you're buying of stock aren't doing anything when they're buying hundreds of thousands of shares of stock. With futures, we're trading 1, 3, 5, maybe even 10 contracts. Some of our students trade 10 contracts. They're trading thousands. Who do you think drives the market? It's institutions, institutions, institutions. Okay? Understanding that is important because you want to know where they're playing, because why would you want to play against that? And that's what our strategies are based upon, playing with the institutions, not against them. So we're going to talk about this. I like to do this I'm gonna pull this off. I'm gonna get a little fun with it. Okay. I like to do this in a weird analogy. I don't know why I came up with this analogy, but it worked, like the pig and ham producer. So let's say we'll relate this to the stock market here in a second. But let's say the price of socks retail at $10. So if we went to a store right now, we're going to be paying $10 for a pair of socks. Okay? That's an expensive pair of socks, I get it. But look how pretty they are. Okay? $10 for a pair of socks. Let's say that's what they retail for. All right? Some places I can get it for $9.88, whatever. $10 is what they retail for. Okay? Now, we're buying, again, we go to a store, we're going to be buying 1, 3, 5, maybe 10 pairs of socks if we're buying for a lot of people. Maybe it's Christmas, we're buying 10 pairs of socks. Okay? But Meijer, who we're going to shop to, they're buying 10,000. Again, I always like to say this analogy. I use Meijer for those who are watching from home. If you're not in Michigan or the Midwest, Meijer is a Midwestern retail and grocery store. They have probably, about a dozen, maybe a little bit more. Okay, more. Okay, whatever. It's regional. Okay, and they're going to be buying 10,000 pairs of socks. Okay, now if we're buying 1 to 3 pairs for $10, what do you think that they're going to want for 10,000 pairs of socks? Right, supply and demand. If they're demanding 10,000, they're going to get a better price. $6 a pair of socks. Okay? So this is an example how it would look, right? $10, if we're relating this to the market. Price would come down from $10 to $6. Now what happens when Meijer buys their socks for buys 10,000 pairs of socks for $6? They want to sell them. What do they want to sell them for? $10. So price moves back up to $10. This is an institutional movement. Okay? Meijer, smaller institution. Okay, but an institution. So they get filled, they get 10,000 pairs of socks, and they go and sell them for 10. What happens when price comes back down to $6? Meijer's buying socks. Okay, what do they want to sell them for? 10. Now, price starts to move to $10, but now let's say Target wants in. Target, national store, even international, I believe they have them in Canada as well. So it's a bigger institution, or a bigger retailer or wholesaler. Target wants to buy 50,000 pairs of socks. 50,000. Okay? If we're buying 1 to 3 pair for 10, Meijer's buying 10,000 for 6, they're willing to buy 5 times that, $50,000 worth, or 50,000 pairs worth. Don't you think they want a better price? Of course they do. So they want them for $3. And that's exactly what they get. So price moves to $3. What do they want to sell them for? No, they want to sell them for 10. Right? They all want to sell them for 10.